Hello there, welcome to David's Investment Analysis channel. Today I'm very excited to be talking about another special purpose acquisition company, and this time is DiamondPeak Holding Corp, which is planning to merge with Lordstown Motors Corp. Upon closing of the transaction expected in Q4 of 2020, the combined company will change its name to Lordstown Motors Corp and will change its ticker symbol from DPHC to RIDE. The combined company will be traded on the NASDAQ upon closing of the transaction. After the announcement was made, the stock price went from around $10 to as high as $15.10 yesterday, before coming down and closing today at $12.43. In the next bit, I'll be discussing about Lordstown, what they do, and how they earn income. Then I'll look at the qualitative aspects of the business and follow up with a quantitative analysis looking at the valuation and the financials. Then I'll conclude on whether I think the stock is a buy at its current price and whether I own any shares of the business myself. I spent a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And if you do not want to miss out on any future videos, please do subscribe and click the bell notification. And also, when I reach 2,000 subscribers, I will be releasing my top 7 individual stock holdings in my portfolio. So if you do not want to miss out on that, please do subscribe and click the bell notification. If there's any other companies you would like me to cover in the future, please leave it in the comments below. Now let's get to it. Lordstown Motors Corp is an Ohio-based original equipment manufacturer of light-duty fleet vehicles, founded with the purpose of transforming Ohio's Mahoney Valley and Lordstown, Ohio, into an epicenter of electric vehicle manufacturing. The company owns the Lordstown assembly plant where it plans to build its Lordstown Endurance, believed to be the world's first fully electric pickup truck designed to serve the commercial fleet market. The company is led by a strong management team with over 180 years of total experience among the 6 top executives. In short, Lordstown Motors designs and manufactures electric vehicles. Let's look into the details of the Lordstown Endurance vehicle. It has a revolutionary design. The Endurance was built from the group up to the new type of pickup truck, one that is designed smarter, safer, and more productive for work. It has 4 in-wheel hub motors. The Endurance is the first commercial vehicle to feature 4 in-wheel hub motors. This design reduces the number of moving parts and significantly improves vehicle control. The Endurance has the fewest moving parts of any motor vehicle. This advancement leads to a fewer maintenance costs and significantly lower total cost of ownership than traditional commercial vehicles. It has a true 4-wheel drive. With the 4 dedicated hub motors, the Endurance helps you get out of any stick, muddy, or slippery situation. Let's look at some of the photos of the Endurance. The truck looks really cool and very sweet. Let's look at some of the specs. The base price of the vehicle is $45,000, including a $7,500 federal tax credit, with a range of 250 miles, towing capacity about 7,500 pounds, and 0 to 60 miles per hour in 5.5 seconds. Approximately 65% estimated reduction in annual maintenance costs versus similar internal combustion engine pickup trucks. Now let's look at some of the qualitative factors. We'll first look at the management team. The CEO and founder of Lordstown Motors is Steve Burns. He is a world-class innovator behind every product developed and sold by Workhorse. He was the co-founder and former CEO of Workhorse Group, an American manufacturer of electric power delivery and utility vehicles. Steve has over 35 years of experience. The rest of the management team: Chief Operating Officer John LaFleur, Chief Production Officer Rich Schmidt, Chief Engineering Officer Darren Post, Director of Propulsion John Vo, Chief Financial Officer Julia Rodriguez, all with at least 25 years of experience, and many in the electric and conventional OEM experience. The management team appears to be knowledgeable and experienced. I would continue to trust this management team until any issues are noted. Let's look at the industry outlook. There has been several reports that suggest that the electric truck market would be growing in the next several years. It suggests here that the global electric truck market is forecasted to reach 1.5 million units sold by 2025, registering a compound annual growth rate of 18.5% during the forecast period. The significant growth in recent years is because of the low operating and maintenance costs of these trucks, government's regulations and incentives, and declining battery prices. It is expected that the battery electric vehicles are expected to grow at the fastest pace during the forecasted period. In addition to R&D of battery technology by electric truck manufacturers in collaboration with battery and motor technology partners toward improving energy density and increasing battery life, coupled with the reduction in the battery price, is also driving the growth to electric truck market for battery electric vehicles. Another one by Report Linker, it suggests that the electric truck market is expected to register a compound annual growth rate of over 14.3% during the forecasted period between 2020 and 2025. Factors driving the growth of electric truck market are the enactment of stringent emissions norms imposed on commercial vehicles, incentives for the adoption of cleaner and zero-emission vehicles, and the reduction in fuel and maintenance costs. Governments across the world are putting pressure on vehicle manufacturers to reduce carbon emissions caused by diesel fuel combustion and tackle greenhouse gas emissions, in turn pushing them to invest in developing electric trucks. Meanwhile, low-emission zones are driving fleets to replace diesel trucks with cleaner options. We can see from these two reports that the compound annual growth rate is between 14.3% and 18.5%, and Lordstown can likely benefit from this growth. And what we see here is management's projection of the EV market. Management expects that 20% of the total powertrain by 2030 is fully electric, and 60% by 2040. They also project that the compound annual growth rate will be between 30 and 35% between now and 2030. We can also see here that the percentage of light trucks, which include SUVs, CUVs, and pickups as a percentage of total vehicles, has increased from 51% in 2006 to 74% in the last 12 months. There appears to be a trend toward light truck vehicles since 2006. Lordstown have a very interesting business model that targets the fleet market, so it's more towards commercial users and selling them in fleets. It avoids the retail sales network, the orders are larger and more sticky contracts. The market is relatively new with no dominant player. Even though that they are more towards commercial users, but I'm sure individuals would just be as interested in the electric pickup truck. They already have $1.4 billion worth of pre-orders. That's approximately 26,666 trucks if we use 52,500 per truck. The Endurance is in the $65 billion US full-size fleet pickup truck market. Very interesting here per management, 80% of the fleet customers surveyed have expressed a preference for the Endurance versus the traditional products, but I don't believe other electric pickup trucks were included in this survey. Let's look at some of the interesting facts about Lordstown. When compared between the Endurance with ICE pickup trucks, the Endurance is slightly heavier and less range, but it has a lot higher payload, which is the amount of capacity the truck can carry safely. It delivers the equivalent of 75 miles per gallon and has a lower maintenance cost. If we compare the total cost of the vehicle over 5 years with an estimated of 20 miles per year, including the fuel cost, maintenance cost, and tax credit, the Endurance costs about $52,000, which is significantly cheaper than the Ford 150, which costs $71,180. However, quite interestingly here, when I go to the Ford's website to see how much the cost of the F-150 is, the base model is only $28,745 versus what management have of $51,775. That's a difference of more than $23,000. As mentioned earlier, their Endurance is equipped with hub motors in each wheel and seamlessly integrated with their software system, benefiting efficiency of the vehicle and driver experience. The Ford drivetrain part significantly reduces the number of parts compared to an ICE truck with over 2,000 parts. It has been tested with no issues. This has been long sought after in the automotive industry, and Lordstown has been able to accomplish this. Lordstown suggests here that it's the only EV player providing a full-size pickup truck primarily focused on commercial fleets. While this may be true, but businesses don't have to go with Lordstown just because they're commercial focused. It can likely go with others, and a true competitor would be Ford's F-150 electric, likely coming out in 2022. It shows here that the Endurance is the cheapest amongst the group of vehicles after netting of tax credit of $7,500. But for Tesla Cybertruck, there's actually cheaper models that start from $39,000. And Elon Musk said if the Cybertruck fails, it'll just build something more traditional. It would be very interesting to see what the competition would be like in the future. Lordstown has several key suppliers for their parts like Samsung for their battery, LFE for their hub motors, Goodyear for their tires, and GM for their non-customer facing components. Lordstown has several key strategic partnerships including with GM, LFE, Workhorse, Goodyear, and others, and also working with the government on incentives and grants. They already have an assembly plant that they bought from GM that is fully equipped with that only needs about $120 million to reconfigure this 6.2 million square feet plant to get it ready for production of the Endurance. The estimated annual vehicle capacity is more than 600,000 vehicles. Because the GM plant was in excellent condition with equipment, Lordstown estimates $120 million of the investment to retool the equipment for full production readiness. And here you can see the breakdown of the $120 million. Lordstown wants to be the first to market with their electric pickup truck, and it seems that they have a lot in place. And this is their projections: to start production sometime early 2021 and delivering 2,200 of the vehicles in Q3 and Q4 of 2021, 31,600 of them in 2022, 65,000 of them in 2023, and 107,000 of them in 2024. Let's look at some of the other risks. Some of the items that would hinder the global growth of electric vehicles include the lack of standardization of charging infrastructure, the general higher cost of EVs compared to internal combustion engine vehicles, stringent rules for installation of charging stations, and limited range of EVs, and these would present a risk for Lordstown. Another risk is that there are several competitors coming into the market and can be challenging for Lordstown to compete with. Some of the competitors are large organizations like GM, Ford, Tesla, Nikola, and Rivian that is backed by Amazon. Another risk is with the transaction. It is not yet finalized and the transaction won't be closed until sometime in the fourth quarter of 2020, and the deal would require the shareholder approval and subject to several closing conditions. And some deals do fall apart, and if this deal does fall apart, the stock price will go back to $10. Now let's look at the quantitative analysis. With $675 million raised from the merger, it should be sufficient for Lordstown to achieve cash flow positive, meaning that they will likely not need to raise capital by issuance of shares or borrowing debt, which is very positive. Management anticipates to spend $135 million on capital expenditures like retooling of the plant to get it ready for production, $90 million for R&D that includes product development, validation, and certification, $130 million for operating and general administrative expense, and that leaves about $320 million of cash for contingencies and additional growth opportunities. This is a lot of cash remaining, and so that even with other amounts are slightly under budgeted, there's not much of a concern in the near term. Here are management's financial projections starting production in 2021 and selling 2,200 units, 31,600 units in 2022, 65,000 units in 2023, and 107 units in 2024, generating revenues of $118 million, $1.7 billion, $3.5 billion, and $5.8 billion respectively. This reflects estimated market share of 3.5% by 2024 of U.S. full-size fleet pickup truck market. This appears reasonable based on the market size right now of 1.3 million units sold. The current projections do not include any new products, and there is significant upside with the introduction of new additional identified products, and there has been some indications of a possible SUV in the pipeline. Management expects to have positive EBITDA in its first full year of production in 2022, and improving on it through increased profit margins by lowering the cost of sales. It is projected that Lordstown will be able to lower the unit cost of each vehicle from a total of $42,000 to $37,000, a 12% reduction in costs. Let's look at the pro forma valuation. The company's enterprise value is at $965 million based on 1.6 times estimated 2024 EBITDA or 0.16 times estimated 2024 revenue of $5.8 billion, plus $675 million of cash that is anticipated to be on the combined company's balance sheet. The total equity value of the company is around $1.64 billion. With $280 million from the SPAC plus $500 million from the PIPE investment, less $60 million for payment in kind to GM, less $45 million for transaction costs, leaves about $675 million of cash on the balance sheet used for development and commercialization of Lordstown's endurance vehicle. The payment in kind of $50 million relates to plant assets, plant permits, and plant operating costs. After the transaction closes, SPAC shareholders will retain 70% of the combined company. Existing Lordstown shareholders retain 48%, PIPE investors retain 30%, and SPAC founder retains 4%. Per management, Lordstown has a very cheap valuation compared to peers, with a 1.6 times 2024 estimated EBITDA or 0.16 times 2024 estimated sales. Let's look at a more updated valuation amongst comparable companies. The current market cap of NIO is $16.5 billion, Tesla is $276.7 billion, Nikola is $12.6 billion, Hyliion is $3.2 billion, Fisker is at $3.5 billion, and Lordstown is at $2 billion. Looking at the price to estimated sales ratio, Lordstown and Fisker's valuation is the cheapest amongst the group. Lordstown's valuation uses $118 million for estimated 2021 sales, $1.7 billion for estimated 2022 sales, $3.5 billion for estimated 2023 sales, and $5.8 billion for estimated 2024 sales, growing 1,336%, 105%, and 66% respectively. These growth rates are the highest amongst the comparable companies. If Lordstown can reach these projections, the valuation would appear very attractive. It trades at similar valuation to Fisker. If it trades at the same valuation as Fisker at 0.33 times estimated 2024 sales, the price of the shares would trade at $11.60. But if it trades at the same valuation as Hyliion at 1.51 times 2024 sales, the price of the shares would trade at $53.24, suggesting an upside of 328%. And if it trades at the same valuation as Nikola at 2.4 times 2024 sales, the price of the shares would trade at $84.38, suggesting an upside of 578%. In addition to the cheaper valuation, Lordstown has a strong cash position with $675 million of cash, or 33% of the market cap. Per management, this should be sufficient cash until they are cash flow positive. While the valuation appears to be very attractive, but please note that these valuations are based on management's projections of revenue only. Interested investors should consider whether these projections are reasonable and apply a level of margin of safety. Conclusion. In my opinion, at today's price of $12.43, I think it's a speculative buy because of the following reasons. They have a strong management team led by founder and CEO Steve Burns. The top 6 management team together have over 180 years of experience. Lordstown is in the EV truck industry that is expected to grow 15 to 30% annually, so the opportunity would be there for Lordstown to grow. There's a lot of excitement in this industry with the recent huge surge in EV stocks like Hyliion, NIO, Nikola, and Tesla. Lordstown is now another option. I believe there is enough demand for several successful EV companies that can coexist in the industry. Lordstown has some amazing projections, and is set to grow faster than industry, suggesting that it will take market share from other competitors. Lordstown is expected to be the first full-size electric pickup truck to the market. They already have several suppliers for their parts and have an assembly plant that just needs some retooling and can start production. Lordstown Endurance is an attractive-looking pickup truck that is very affordable compared to competitors, with the expectation of lowering costs of each unit by 12% over the next several years. Lordstown has a very unique, efficient, purpose-built design that uses 4 drivetrain parts, 1 on each wheel to drive the vehicle. They're currently trading at a very reasonable valuation compared to competitors. They have $675 million of cash on the balance sheet, sufficient enough until Lordstown is cash flow positive. But I do have some concerns, and here they are. The lack of standardization of charging infrastructure, the general higher cost of EVs, stringent rules for installation of charging stations, and limited range of EVs present a risk to slow the growth of EV industry. The growth potential does look very promising, but remind you that the company currently does not have any sales, and the projections are only estimates, and can be very different from reality. Another risk is that they have several competitors coming into the market and can be challenging for Lordstown to compete. Some of the competitors are large organizations like GM, Ford, Tesla, Nikola, and Rivian that is backed by Amazon. Despite the reasonable valuation, if the deal does fall apart, the shares will go back to $10 per share. The transaction is still subject to shareholder approval and closing conditions. Disclosure: I currently do not own any shares of DPHC, and I haven't decided on whether I'd be buying any shares in the future. Between Lordstown and Fisker, I probably prefer Lordstown just because they're closer to production with the assembly plant in place and supplies arranged. They also have a better projected growth. I think both of the companies are great companies with a lot of potential, especially if they can reach their projections and execute as planned. That's it for now. I spent a lot of time preparing for these videos, so I really appreciate if you could like and share my video. And when I reach over 2,000 subscribers, I will release a video on my top 7 individual stock holdings. And if you do not want to miss out on that, please do subscribe and click the bell notification. Thank you for watching. Until then, see you next time.